Good afternoon and good morning. This is Meir Valensky with Driving Markets. So last week all the markets came off and ended up lower based on the fear of inflation and rising interest rates. So what you've got inflation in the States running at a 40-year high at 8.5%. You've got it in the UK running at a 30-year high at 7%. But don't be fooled. These inflation numbers are a lot higher. That's just the actual official figure, but the unofficial figure is probably running at anywhere between 15 and 20%. The cost of living is going through the roof. Just be aware of that, and therefore it's going to have a big impact on property prices and also on currencies. Let's look at it in a bit more detail. Obviously, as far as property is concerned, you're going to end up paying more interest on your property, on your mortgage, than you were this time last year. So anyone who's got a mortgage coming to an end now, or the rate's coming to an end, they have to renew it. The rate is going to at least double. So they're going to end up doubling your mortgage payments, and that's going to have a significant impact on your finances and your household finances as to how to manage your budget. In addition to that, you've got also in the States rising interest rates. As a result, there will be more dollar strength going forward. So the dollar against a basket of currencies is going to be rising and probably continue rising all the way through to the end of the year. So those people who are FX traders should be looking at dollar denominated stocks and dollar denominated currency pairs and saying, where can you go with this particular currency or the particular pair? In my opinion, it's going to go higher, so keep an eye on that. Inflation is also only going to go higher. It's only one-way traffic at the moment. You've got a couple of factors. Number one, you've got all the commodities, including the soft grains, the metals, and oil. Oil is creeping back up. It's going to approach well above $115 soon, and then it's going to go to $150, and that's going to send shockwaves throughout financial markets because of the cost of production is going to increase as a result of oil going up. So take that into consideration. So I just want to do my shirt. It's not very nice. Okay, right. Furthermore, you've got wheat, grains, barley, corn. All of that's been impacted by the Russia-Ukraine war, and those prices are just going up, and therefore the cost of living is going to rise even further, having a big impact on economic growth. So that's regarding commodities, soft grains, oils, and let's talk about a bit more in FX. So in FX, I've got a big fan of the Aussie dollar, simply because as commodities rise, and Australia is a major producer of metals and commodities, then the Aussie dollar will benefit from that rise in commodities. Look at the UK pound, the GBP. The GBP is also going to benefit from a rising interest rate environment, and it's going to get stronger as we go on, simply because the UK government will have to increase interest rates going forward. Look at Bitcoin, look at cryptos. So Bitcoin, people are talking about it going to $1 million a coin. Not in the short term. In the short term, it's a high risk investment, it's a high risk asset, and therefore money's going to be pulled off the table and put elsewhere, and that's causing the price of Bitcoin to fall and being pushed downwards. So keep an eye on that, and keep an eye on all the other currencies. I've got to mention Elon Musk because I'm a big fan of his. He put in a private bid for Twitter last week, which I did say already beginning of last week he's probably going to take further action on Twitter, and he wants to make Twitter a private platform which allows for complete free speech moving forward. That's going to have a big impact on the other platforms, because if you're allowed complete free speech on Twitter, then people will go there and express their views freely without being either patronized or without being assessed for compliance. A big factor. I love Elon Musk. If it's going to happen, great. If not, then you could see Twitter fall down. So keep an eye on it. What else have we got? We've got bonds, US Treasuries, 2-year bonds, 3-year bonds, and 5-year bonds are all up, all running at a 3 to 4 year multi-year high. Keep an eye on that, because bonds are an indication as to where financial markets are going and where interest rates are going. Very, very important. This week you've got some significant figures. You've got China GDP, gross domestic product. It's reporting how China's doing now in the last quarter. Wow. It's going to be a big number because that will give us an indication regarding how the Chinese economy is faring. Also this week you've got Bank of America reporting and you've got some other conglomerates reporting. Let's see how their earnings are faring under the present situation of Russia, Ukraine, and lack of money coming in from that particular region. I think it's going to have a big impact on Bank of America, and I think they're going to miss analyst expectations. So keep an eye on the Bank of America. We've got another raft of reporting coming out this week from Google, Salesforce, and a couple of other big conglomerates that was also giving us indication as to where we're going regarding high tech. As regards Nasdaq and the growth stocks, they will be impacted by rising interest rates because people pull money out of risky investments and put them elsewhere. Keep an eye on it. You can contact me on LinkedIn, on WhatsApp, on Instagram, YouTube, comment, subscribe. I love to hear what your comments are. This is Meir Walensky with Driving Markets. Have a good day.